Hey everyone, this is the 18th video review. I changed up the format a little, so what I did is I kind of clipped the trades rather than trying to search it. So I already have it pre ready to go. So I just quickly swap over. And this is the first trade, and then this one is the missed trade. So I can quickly just go and view rather than having to scrub and find what I'm trying to watch. I think this is really going to speed up the reviews, really make them streamline and make them easier to watch. Definitely. Quick overview of the day. Really good day today. Best day so far out of the 8 days I've been trading. Really stuck to my plan. Had the patience and the discipline to not just force a trade. Anytime I saw a possible trade forming, I waited until the premise looked to be true, the price action occurring to make my premise true, with as I like to say, clear premise, clear stop, and a good risk reward. That's what I'm looking for in every trade. But yeah, today, very good day. Yeah, didn't force any trades, didn't make any trades that weren't part of my plan. Just traded well today, definitely. So right now I'm gonna go over the first trade. I'll be going over. There's two trades I'm going over. Trade number one, the one trade that I made today, only one. Huge different than yesterday, where I had I think about 15 trades. But I'll be going over one trade and one missed trade. I'll be starting with the missed trade as that happened first, and then I'll go to the actual only trade of the day. So missed trade. First thing I want to make note of is it's 6:52. For the past couple days, I've noticed at 6:52, or in Eastern Standard Time 9:52. I'm pretty sure. I think it's 9:52. At 9:52, 9:55, 9:50, right before the 10 o'clock Eastern Standard Time, 7 a.m. Pacific Standard Time. On the ES, I've noticed a behavior where I quoted the break of the day, where there's a big break, and that's like the break. There's stops being hit, quick, fast market action, and I've noticed this for a while now. It's been at least I think 4 or 5 days. I've noticed this kind of action happening near the 650, 655, even late 640s. So this is the first missed trade. This is the first one I'll be going over. So let's just play it through, and then I will go over the details. As you can see, I'm about to write missed trade here. So it was like a real time miss. Yeah, double check to see if there was a missed entry. I wanted to make note of that. We'll go back. Just really, there wasn't much market action happening today. Much breaks. I may note in my trade notes there was a lot of fade opportunities compared to breakout opportunities. So we'll start with the context. Price was starting to drop lower quickly. It found buyers at the 607.50 bid. Or really, it found buyers at the 607.50 bid. The 607.50 and 607.75 pair. The 607.75 went offer to bid, and then we started to see some refreshing at the bid, and the new offer at 607.75.8. So we'll watch that happen here. You'll start to see. We're looking at the 607.75 when it's offer, and then when it turns bid. We'll see it in just a moment, I believe. Unless I missed the recording. I think I screwed up the recording. Let's watch it one more time. Hold on, sorry. So I think I recorded this too early. So yeah, but the 607.75 went from offer to bid, and then we started to see some refreshing at the bid, and the new offer at 8. Sellers would be hitting the bid enough to break it, but buyers were able to bring it back to that price pair quickly. The 775 and the 8 even pair. Sellers, let's see here. During the price pair change, sellers were interested in selling at the 750 bid. So you can see here as we watch it, as buyers push the 775 from offer back to bid, there's not much buying occurring at the 8 compared to at the 775. There's a lot more willing to sell at the 775 than at the 8. There was enough buying to break the offer, but it did immediately trade lower. And as you can see, when 775 turns offer, there's still sellers willing to hit the bid. They're not. They see that price as they're interested to sell at that price. Yeah, I definitely cut this trade short. But yeah, they're interested to trade at this price. Actually, you know what? I'm gonna go to the actual recording, and we're gonna watch this thing fully because this trade doesn't really make much sense if we're not watching the full thing. All right, here we go. So we see refreshing here. See it kind of refresh, get broken. See again. See still more trading into. Here, not much buying here at the 825s. Then we see the lack of interest to push 775 back to bid, and then sellers start breaking in at 68. Right, so some notes again I made of the sellers would hit the bid at 8 very quickly as it turned here. So you'll see as buyers were able to take 8 even from offer to bid, sellers quickly hit it back down. And then buyers slowed while sellers started picking up. And then buyers slowed again here at the 775 while sellers were willing to hit it to 750, and then broke bid and the price ticked lower. So the interest in buying at the 8 even pair started to disappear after we traded lower. So you can see buyers just a second ago. You could see them have some desire to trade at that 8 offer. I'll watch it in just a moment. As soon as price starts trading lower. Alright. Lack of buying. Then they start coming in. Offers kind of break. Buyers start coming in a little. Sellers still seemed to be more controlled. A lot of buying came in, but then it stopped. There wasn't any more, and then buying stopped at the 775 level, and then sellers came in, broke bid. That's the context of the trade. Sellers were still interested in the lower bid 750, and then broke it with price, then trading lower. Obviously, with 68 trading into the bid at 750. and then they were able to push it lower down to the 7 evens, and then eventually have price break lower. NQ at this time near its lows. You can see it when you see that push lower right there. See during this whole kind of market action, you can see it kind of get close to the low, break lower. See this. Now we start seeing it push lower as the ES starts pushing lower. I finally got the E-mini Dow DOM, so tomorrow you'll see that here instead of the trade notes. So I'll be able to get a bigger picture look at what the market's doing and seeing if I have a good break play coming. If Dow's pushing higher, Dow's near its highs, and as ES pushes higher, Dow's pushing higher, NASDAQ may be trading near its high or pushing higher as well. It's more of a conclusive together kind of move. But the premise of the trade here was that since buyers are showing little interest in wanting to trade into the offer at 825, as you'll see here, the little interest at 825, and they started to show a lack of interest at the new lower offers, buyers are no longer interested in buying at these prices, and price needs to advertise lower to entice them back. This is also coupled with the strength the sellers were showing in how they were constantly trading volume into the bid, whether it was 8 or when it was 7.5. They were still willing to hit the bid. So even though that the bid turned higher at the 8, and even the bid turned lower past the 7.75, 7 3/4 to 7.5, they were still willing to hit the bid, and they were willing to hit the bid even past 7.5, down to 7 1/4, 7 even, 6 and 6.75, and so on. That's the premise. The reasoning for the stop here. So the stop, the entry would have been 7.5 after seeing the lack of buying here, and the holding offer really. The entry would have been 7.5. Of course, that is it's theoretical, of course, because I didn't actually get into this trade. This was a missed trade, but the point is, I'm just making a theoretical entry on this. After seeing the lack of interest at the 7.75 offer, when I see the holding of the offer at 8, and then the bid breaking, I want to see the new offer not be a desirable spot for buyers, right? So once when 7.75 goes offer, I want to see not much desire to buy at that price. Once when I see that, then at the new offer, when a once held refresh bid is now able to hold the offer, that's what I want to see to make me pull the trigger and get into the trade. That is what occurred, obviously, and I would have gotten filled in a perfect world again at 7.50. Obviously, there's going to be slippage because the fast break that happened right after. Could have gotten filled at 7 even, 7 1/4. Had I gotten filled at 7 even, at 7 1/4 wouldn't have been the greatest trade, with the stop being at 8.50, as it's right above it's a tick above the kind of the invalidation point. Once when buyers are willing to buy at the 8.25 offer and able to actually clear the 8.25 offer, the premise of the trade's gone. I mean, if the premise of the trade starts weakening, the more and more they're showing strength in the 7.75 and the 8s. It's just that invalidation point, that, as I call it, the point of the premise no longer being valid, is that 8.25. It starts here, gets as it goes up. If it trades into 7.75 and offer breaks, the premise gets weaker and get weaker at the 8. If they're able to break it and sellers aren't showing the strength, it gets even weaker. 8.25, and if they break that, premise is invalid. They broke every price point that was part of the premise of the trade. So this trade would have, that's why the stop would be at 8.5. Let's see. The exits here would have been would appealed one at the slowdown of the selling into the bid at 606.75. So as we see price trade lower, right after the break. We see kind of that slowdown when we start seeing the 775, right? 8 contracts, 69 at 7 at the offer. Would have probably peeled one there, maybe gotten filled here, maybe lower, maybe higher. That's the first peel. The second peel would be after the break, when the bid was holding 606 even. So we'll show that here. Let's see, 625 kind of holds a little. Probably could have gone out there, but then we start seeing 606, 625. The last contract I would have held on and waited till seeing the clear shift of interest from selling to buyers, and that would definitely be here at the 605.50, 605.75 level. This is now price is now advertised lower to a point where buyers are interested in the offer again, right? I mean, look, 226, 254, bids holding, being refreshed, offers going bid, and it's getting harder and harder for sellers to push the bid lower. They are finally able to, but I would have probably exited already after seeing the lack of that shift of interest. Once when I'm out, the trade's over. Premise of the trade's gone. I don't care if it goes up. I don't care if it goes down. I'm just gonna look for the next trade. So that's a missed trade number one. Had I followed this trade, it would have been definitely part of my plan. It has the 3 key components: a clear premise, a clear stop, and a good risk-reward opportunity. A good risk-reward opportunity I classify as 1-to-1 of my first peel. So if my stop is 4 ticks away, the first peel needs my entry needs to be about 5-6 ticks away from the low or the high, in this case the low. So when I first peel, the first peel would be at the 4 contract minimum, or at 4 and up. So if the trade allows me to peel 4 and up, that's a good risk reward. If it allows me to peel less than 4, that's not a good risk reward. I want the first contract I peel to have a 1-to-1. So in the case if price starts trading back to my entry and I notice the premise starts getting weaker and weaker, I could get out of that trade and maybe get a smaller loss. Or if I'm trading 2 contracts, which I plan on doing tomorrow, if I got stopped out, and I got stopped out exactly at that 4 tick, it would be a break even, if I'm doing my math correct, because you get 4 ticks on one and then you lose 4 ticks on another, evens out because it's 1-1. If I'm doing my math correct, it would be break even. But I didn't make this trade, but I intuitive, I can't pronounce it. My intuition noticed it. All right, so it wasn't one of those trades where I noticed it after the fact, after watching the trade review video. After watching the trade review video, it wasn't like, oh, I saw this and I didn't see it during the day. As soon as I saw that, I had a feeling like, oh, double check in the video review if I missed a trade, and I did. I did miss a good potential trade at the 750 and 8, price levels. That ability to get that feeling of that intuitive sense of what a good trade looks like is a nice skill to have, but I don't expect to rely on that anytime soon, nor should I rely on it, because I'm not developed yet. This is my 8th day in. I can't expect that all of a sudden my intuition is aligned with my plan, and my subconscious is, following the plan. Obviously that's not correct, because 7 out of the 8 days were not. I was not making planned trades, right? So I can't trust my intuition yet. Eventually, years to come, 5, 10 years, 15, 20 years, I don't know how long. But then I can start leaning on it the more experience I have. The mistakes of the trade really was just not taking it. Missing the opportunity of a clean trade is not something I want to consistently keep doing, obviously. But right now, again, my focus is taking what I call clean trades, good trades, planned trades, you can call, I'll interchange them really. But taking that clean trade rather than a dirty trade, or a bad trade, really, clean, bad, whatever. That's the goal currently, to take clean trades and to focus on taking clean trades. So if I missed it, that's okay. I'm not worried about missing opportunities right now. I'm more worried about forcing trades. That's what I'm more worried about. So long as I don't force a trade, it's a good day. And I trade according to my plan. I have clean trades. It's a good day. Something I made note of is I noticed in other trades I didn't take, I was ready to place a stop after seeing a potential premise form. With this trade, I didn't do that. So I didn't really see this trade in real time, but I felt like there was a missed opportunity, and that's why I took the note. So I wasn't focused enough to see that opportunity. But I guess some feeling in me. So it's like, oh, I'm pretty sure I just missed a trade break. It's at 6:33. I noticed over the course of past couple days and last week, around this time, there's the, as I call it, break of the day. So maybe that had something to do with it. But what I'm going to do tomorrow to fix it is just put more focus during the session, putting myself in that focused state of mind, giving me the readiness to take this trade rather than, I guess, the state I was in yesterday or this morning when I was watching the DOM. It didn't seem like I was ready, because there were other trades during the day where I had my cursor ready to go. I see a premise forming, like let's say for example 415 traded into the bid and 24 in the offer right here, like right now. I would immediately have my cursor over here, and I'd be waiting to see if 625 holds, and then the selling starts increasing into the 6, and that's when I would enter, and I'd immediately have my cursor over the 650 level. So as soon as I enter with my keyboard, immediately press into the stop, and that's me getting ready for the trade. As soon as I see that premise form and that premise get valid, boom, into the trade. Didn't do that here, obviously. Now we'll go to trade number 1 here. So let's see here. So trade number 1, I'll just scroll over. This makes things 10 times easier, to be honest. Let's see, trade number 1, where are you? Okay, so this is trade number 1. So again, we'll watch it through, and then I will talk over it. This is one of my longer trades, really. It goes on for a little bit. I'll start narrating it now, but really the problems with this trade is what's going on right now. The price action that's happening. You can see the clear lack of wanting to buy at the 1275 level, the clear lack of wanting to buy at the 13 even, and then the shift of interest in the desiring to sell. At the 1250, buyers are stepping up, but they're not willing to go even higher at the 1275, and then buying kind of fades away, as you'll see soon. And sellers decide, 1225, I'm liking that price now, right? So you can see slowly but surely, and then sellers push bid lower, able to get 1225 into the offer. Again, buyers are only interested in the 1250, not the 1275. They were able to break it, obviously, but still, it's not a meaningful break because they're not putting that volume into the offer, and they're not able to really push it higher. As you can see there, they were interested in 1275 now, but they again not interested in 13. So there's not much. It's just kind of telling me like, hey, buyers are slowing down. While sellers, they're interested at these bids and even trading at lower bids. So first things first, we'll go over the context of the trade. So sellers are putting in a large amount of volume into the bid at 612.50, right? So the 1250 level, watch that happen right now. As soon as it plays. So you start to see some volume into the 1250, right, compared to the 1275. Buyers are trying to hold this bid but are unable to keep it held. Bid goes offer and the new price pair comes into the 25 and the 50, the 1225 and the 1250 price pair. At this price pair, buyers quickly trade it into the offer, bring bid back to 1250. Back to the bid. Sellers and buyers are now battling to keep that 1250 bid and offer, right? So buyers want that bid, the 1250 bid. Sellers want 1250 offer. And you can see it here as we go back and forth. And the whole time while this is occurring, you can see at the 1225 and the 1275 level, there's a lack of selling into 1225s, a lack of interest from sellers, and then there's a lack of buy interest at the 1275 level. There's more obviously than the 1225 level with the amount of contracts traded at 1275. So right now I'm more, as you can see my cursor's right here, because I'm seeing the lack of interest at 1225, even though it has plenty of time to actually trade there, while buyers are really liking that 1250 offer and still showing interest at the 1275. I'm leaning toward the buy side. We're near the current highs, but again, here I can see the setup forming. Buyers start to hold the bid better at 1250, and then the selling that was occurring there kind of fades away. Then the interest in buying at the 75 level comes in greater and then lifts the offer. So we'll watch that happen right now. So you kind of see the selling kind of fade away. Here we go. You'll see it. 356. Not as fast as previously it was volume wise. And then buyers immediately take the offer and put 13 offer, 1275 to bid. The premise here is the clear lack of interest at the 1250 bid, right, from sellers, now that they're lacking the interest. So that's the first level of the premise, the change of the interest at the 50 level from the sellers, right? So that change of interest, not wanting to sell at the bid at 1250 anymore. And then the change of interest at the 75 level from buyers. This is also coupled with the lack of interest from sellers at the 1225 when it was bid. With the information provided by the market that there aren't many sellers willing to hit the bid at the 25 gives me indication that there aren't many sellers here. They're not willing to start to trade lower. So price again has to advertise higher to entice these sellers. So when I see the sellers start to fade away at the higher prices and step out of the way with their orders, while buyers increase their interest at these higher prices at the 75 level, the 50 and the 75 when it's offer, and while the 50s bid through the refreshing of the bid. This gives me the premise that if sellers are not willing to sell at these prices, again, price must advertise higher. Right, so buyers see this as value and can drive price higher, enticing more buyers to get in on the break and to stop out weaker shorts as we are reaching near the high. And if buyers start to fade away their interest at the 75 and the 50, while sellers start to show more interest at the 50 and the 25, then the premise of the trade is invalid. So that 1225 level is that invalidation point, as I said, and each price higher, so 50 is a level, 75 is a level, and 13 is a level. So seeing a lack of interest buying at the 13 is at the entry price is a hit to the premise, makes it weaker. Seeing the sell strength in 75 weaker, 50 weaker, and then of course seeing it break 25 and seeing high volume come into the 25 bid, that's the invalidation point. Makes the trade no longer valid. So the stop for this trade would have been one tick below that invalidation point, 2025 at 12 even. If sellers are willing to put the 25 offer, then I know they have the strength, where the premise of the trade was leaning on them not having the interest in the strength at this price point. So, I want to be out. I was thinking, I made a note here, I was thinking about placing a stop at 12.25 rather than putting the volume stop at 12. So if 12.25 does break, I wouldn't. If 12.25 does break, I'd be executed. My stop would be executed on that break, rather than on the break of the 12. I'm thinking might try that tomorrow with how I play my stops. See if I don't get as much slippage. But we'll see. We'll see what happens. Like today, I had a slippage of 6. It's 4 ticks away from my entry, and I got filled at 11.50. So I had 2 ticks of slippage. That cost me a good amount on 3 contracts compared to my equity. The reasoning for the entry on this price was right after I noticed the buying into the 75, that the offer, and it being lifted. Once when I saw this price turn bid, I hit the market as the premise of the trade was now set, and the stop had a clear explanation to it. Now that buyers are willing to step higher and buy at this higher offer, that validates the premise, and then we let the trade work on to see how it plays out. So I did get stopped out on this trade. This trade was a loser, as you previously saw. And the big thing here is that lack of interest occurring now at the 13 and the 1275 level, 13 even 1275 level. Right, so we don't see much buying at the 13 even. We see a very slow pace from the buyers at the 1275. That is very slow. And then we see sellers start to pick up steam and show more interest at the 1250 again. Buyers again not showing as much interest as the premise would like it. So right now it's a very weak premise, very weak trade, and we're not seeing that strong conviction from the buy side anymore. Look, 75 breaks, it breaks up, but look, immediately sellers took it back down, and then it's holding again. One traded into 13. 1250 goes bid. 1250 goes from bid to offer. Again, this kind of stays while a lot of sellers are coming in. Then offer starts to hold, and really once when you see the 1225 volume being transacted at this bid, that's when really you can say, oh, this trade's broken. It's gone. The premise is gone. There's interest in here. So I definitely could have gotten out a lot sooner. I could have definitely gone out probably after seeing the lack of interest at the 13s and seeing the slowness. Boom, gone out 2 ticks at 1250. That would be a 4 less of a tick of loss. So say getting 225, I would have gone 112.50. So that's I can't do math, but that's 112. That's 112 less, exactly. 112 and a half less than what I got filled at. So even though that trade management was very poor, the trade was still part of the plan. And I am very proud of this trade because I'm focusing right now on getting into the clean, good trades. As I've been saying, clear premise, clear stop, good risk reward, right? 13, peel 1 at the 14. That's the first peel, with the stop here. First peel, that's a 1-to-1 risk reward. That's good. That's the minimum, right? And that's what I'm focusing on right now, is trying to get in those clean, good trades rather than try and. My goal is not to have the best trade management, because in order to have good trade management, I have to get into a good, clean trade first. And if I'm not getting in good, clean trades, My trade management isn't gonna. I don't believe my trade management is gonna magically save it. If I don't have the skill to get into a good clean trade, I know I don't have the skill to manage a bad position into a less bad position. So right now I'm focused on getting into the trade, and later on I will work on the trade management of it, and I'll focus more on that when I can consistently get into those good trades. The strength in this trade really was to be patient. The patience I had in waiting for this good setup, a clear premise, a clear stop, a good risk reward, was the strength here. It is night and day compared to the past trading days, and this is something I'm proud of today. Yesterday, I still haven't even finished the video review for yesterday because it's so many trades and so much to go through. I'm gonna kind of have to rush through it, but yesterday's trading was, erratic. It was 15 trades. I had two actual trades that were errors that weren't supposed to occur. It was I don't think, if I remember correctly, I don't think one of those trades was clean. I think maybe one of them was actually, but out of 1 out of 15, that's not, obviously that's not good trading. So definitely improved from yesterday and from past 8 days really. This is the 8th day, so I definitely have improved since then. The mistakes in this trade obviously was that the lack of the proper trade management I had. Seeing the premise start to peel away and show the lack of the momentum I need. These are momentum plays, right? And seeing the lack of momentum coming in from the buyers and the shift of interest from buying from the buyers seeing this as value to the sellers seeing this as value, could have gave me an early clue saying, hey, this premise, it doesn't, it's getting weaker and weaker by the second. Do you really want to stay in this trade? Seeing the lack of momentum, I could have gotten out earlier, and that was the mistake. Obviously, right now I'm not focusing on that, but I do want to make note of it because I'm not just going to gloss over it and be like, oh yeah, trade management was bad, I'll work on that later. No, I'm going to make note of it now. I'm going to realize the mistake, and I'm going to keep it in mind for the next trade, but it's not going to be the sole focus. It's not going to be the deciding factor of if it's a good trade or not right now. But that was the mistake, and how I'm going to fix that and improve tomorrow is by listening to the price action more. In the trade and in my current trade or development process, again, I want to let my stop get hit, as this is the invalidation point. I want to practice trading the premise and waiting till that premise is no longer valid, and which is the invalidation point, my stop. Because I don't think I'm ready to make those discretionary calls during the trade that decides on whether this trade is going to work or not. I'm not skilled enough. It's my 8th day in, right? Obviously, I know nothing. So, that's just true. As RG said it, I'm just scratching the surface. I'm barely scratching the surface, and I have a lot to learn. And I don't think I can confidently say, I'm ready to make discretionary calls mid-trade when I can't even follow a plan, right? So right now, again, I'm focusing on making a plan with as I've been saying throughout the whole video, clear premise, clear invalidation point, the stop, and a good risk-reward entry price. But I will take note of this example of where listening to price action could have saved me a couple ticks. 4 ticks actually. It's more than a couple. But I really am proud of the trade overall. But this was the only 2 really notable things occurring the day. The missed trade that I felt, but I didn't know for sure, so I had to double check. And then the actual trade occurring. I did see a lot of, I made note here actually, you can see at 7:19, a lot of fade opportunities today. There was a lot of potential fade ops that how to, if one day when this is in my playbook, I could definitely bust out these plays. And once when I see kind of the day looking like a fade day, just start fading false breakouts and false pushes higher, and just fade those. Eventually, I'll get to that play as I progress my trading career. But that's it. Everyone, thank you guys for watching. I didn't expect this to be this long for 2 trades, but either way, I appreciate it. See you guys tomorrow.